Hi guys, Lisa Nishioka, Xanadu Real Estate. Today I have with me Toija Beutler with Beutler Exchange Company, and she's here to tell us a little bit more about 1031 tax exchange as you've requested, and here you go.
Well, one of the things we wanted to talk about today are some common misconceptions about 1031. And the first one that we hear very frequently is the idea that 1031 is only for the wealthy. It's only for the rich people taking advantage. People in Congress in particular will hurl that accusation and say, oh, only the rich people take advantage of. I would tell you that 2/3 of our people are just regular people. And it isn't that they're investors or that they own many properties, big apartment complexes. No, those folks, frankly, are selling maybe the one and only rental that they have. And so they're selling a rental house that it was the first home that they lived in originally. And when they got married, they kept it, turned it into rental. And so now they've owned it for 10, 15 years, and they've got gains in there. And they don't want to pay tax on the gain. So 1031 is a wonderful way for these folks to be able to sell that rental and go out and buy. Well, then the question is, what do they want? They do have to buy real estate, but it doesn't have to be another rental right here. And it can be a duplex, a 4-unit, but they could also take the monies and go buy what will eventually be for them a second home or a primary residence. Perhaps they would like a second home at the coast or Bend or in Florida. We can use the 1031 monies from this rental to buy for them a replacement rental. Does have to be a rental for the first couple of years. But then at that point, they can begin to use the property as a second home if they wish. If they're getting ready to retire to Florida, then they could move to Florida, selling their current home here tax-free. Tax-free money is always good, and move into what is this rental in that destination where they would like to reside, if for not vacation purposes, then as primary residence. So it's a little-known technique and really is one of the most frequent scenarios that we see. Personal goal achieved with that kind of a scenario.
So even on a 1031 tax exchange, you can still pull out a little bit of money at the end of the exchange, right? So that they can do some repairs if they choose to.
Right. So there's the notion that you have to reinvest all the money or you have to buy equal or up. But it is common in about 1/3 of our exchanges where they want some of the cash for other purposes. And it can be work on the new property. It needs freshening. And so we will finesse when they can get money out. Now they're taxable on anything that they pull out. But 1/3 of the time, that's the best source of funds for this work that needs to be performed.
Right. So there you have it, a little simple tips on 1031 tax exchange. And if you have any more questions, feel free to reach out to myself, Jason Seibel. He's our beautiful photographer back there. And also Toija. We'll have all of our information listed at the bottom of our video. Have a great day.